Around Friday, April 4th, we actually had to put out a video because Black Monday was trending and everyone was very fearful that this market was absolutely going to tank. And we were just pointing out some simple things saying, hey, this is our 68% zone for the month and this is our 95% zone for the month. So if we actually go below that, we have all the probabilities pointing in the upward direction. And then we saw those little reversal signals on the shorter time frames. Thank you to everyone showing up live. Thank you to everyone who is part of my Patreon who was able to pay attention to that information and make a decision. But boom, what an uptick. And now we're overall moving sideways. So is there risk of going down? Is there risk to go to the upside from this point? And that's what we're going to get into in this video, is go through some of those scenarios to discuss how this thing could overall end up going to higher levels and how it could break down further over time. So let's get into it. Now we are going to use the SPY, but one thing is we are going to be paying attention to that stock market crash trap scenario, unfortunately, because it's most likely going to be a trap if this were to take place. So how would this overall work? Well, this would mean that from this area, we are actually going to see this completely break down. This is pretty much the most bearish looking and scariest looking scenario that I think you could see that a lot of people would be faked out by. And as this is performing and behaving a lot like a bear market, we should be very aware of those things. And of course, I'm going to hiccup and burp at all times. What this would overall do, well, we would look at the shorter time frames, but for the time being, just to understand what would go on down here, this is outside of your 95% line in the sand, right? Then your 95% zone for the month of April for the SPY. We notice that that is down here towards that 502.27. And if we would break down to those lower levels, and then we see that buy come in, you would actually form divergences, maybe even on the daily scale. I want to show you guys the last time that we had daily divergence, and we've done this a few times, but the last time that you had daily divergence was actually right here. You had daily divergence on your MACD, on your RSI, flat, but still there because the price action is going down. You do see this flatness. The divergence is there, and you notice what ended up happening from that was a nice big rip. So you see how daily divergence can actually be a great thing to pay attention to, even though people get super bearish when they see the price action down here. If you see that next buy come in, well, we might see some kind of big leg higher. Now, where do I think that we would get to if this were to happen? Well, I think we would potentially make that divergence, maybe even on the daily scale, but I'd look at a 4-hour chart and you'd see that on the RSI and MACD at the same time. This means that for whatever reason, we could see some kind of resolution and end up turning in the upward direction. Now, what would I think would go on from here? I actually think that the divergence would cause maybe an overreaction to get back up into some liquidity, possibly even towards that 590 area. And then we could actually see that dip down. And this dip down is going to be important because if we're able to overthrow this, and maybe we overthrow it more, if we're able to overthrow this and people see a big drop down to these type of levels, well, then they're going to be going, oh no, this is the next big drop. And it very well could be. This is something to be honestly a little bit worried about, because if the daily is able to cross down here, then that would say, okay, how close are we to the center line? Are we very close to going negative, right? Those are the type of things we'll pay attention to. But for this type of scenario, the stock market crash trap that actually ends up going into maybe even all-time highs, this could be just a first leg push higher, and then we end up at higher levels. We actually push another degree higher, maybe going up to something like 650, and then we're able to break through the all-time highs. We would get some kind of maybe retest of those all-time highs for a moment, then we can actually end up in the upward direction again. So this is how this scenario overall would play out, and this could take you all the way into July. I'm thinking of looking at more towards the fall season, so I think this will play out a little differently than this, but this is a good idea to have in my head, right? The main portion of what's going on and what we're actually looking into for today's video is this part right here. If you see a divergence on your MACD, on your RSI at the same time, and that confirms, that means that a very big move can project higher. You will have daily momentum shifting to the upside in a very positive way. So be open to those kinds of things, because a stock market crash trap scenario for the bears is very possible with this type of look. Now let's go through a slightly bullish scenario where maybe we end up seeing actually a bullish move, right? Get back in our 68% zone by the end of the month. This would push you higher into the end of the month, and we will be going over the shorter time frames on Sunday, guys. I just wanted to get this out there so you guys can get in a good idea of how this thing would most likely move over the next few trading sessions, or over the next into the end of April, if you will. So this would be an interesting thing. We see that extended move, right? We see something like this actually extend higher, and we actually get that kind of ABC type of look, and that sends you a little bit higher than here. So what I want to do is actually pay attention to right here. I want to pay attention to this right around 576 level, because that would be a great level for this to actually pull down in that area and then curl back to the upside. And if you really look at this, you're going, wow, what a tiny head and shoulders that is. No, it's not very tiny. You would have a solid amount of room to go to the upside. I'm not big on measured moves, but I would say that 650 would be a definite possibility if we pull off some kind of look like this. But in both scenarios, I do see some kind of moment where we get another drawdown, some kind of drawdown to get people bearish again. And overall, people realize, ooh, after it turns back up, I made a big mistake shorting this thing. So I truly do think that the scenarios that we're in and the ability to have good news is actually a little bit higher than have bad news. I think we can run into bad things later on in 2025, but most of my inclination is towards the bull side. So I'd be paying attention to those two scenarios, looking for, do we get the divergence? Because this is something that would really get people to make bearish bets. And then if you see that curl back up, boom, you confirm divergence on your MACD and RSI. That can be a great thing. But if we're actually going to see some positivity early on next week, then we could see that extension all the way up into around 576 before we actually pull back. And then we see that curl back up again to go to that potential all-time high. So we will be paying attention to these type of things, but these were overall the bullish scenarios. So let's go over something that could be a little bit more bearish. When discussing the bearish scenarios, I wanted to bring up this point right here. Back in August of 2024, we found that V shape that actually took you past the level where you would make that potential head and shoulders. And that's why we're really talking about this, maybe getting a strong move to extend or making that divergence and then extending to higher levels before you see that pull back. But notice this. It pulled down in positive territory and was able to curl back up into positive territory. So something that we're really going to be paying attention to for if this overall move would fail is how close are we to going negative? How close are we to going negative? Because if this MACD pops up to that center line and then curls back down, that overall could be some kind of flush. So we will give you updated weekly expected moves here in purple. We will give those out in Sunday's video as well. And Patreon members, make sure you're paying attention because weekly expected moves are going to be very important as we're seeing this thing make decisions in the next week or two. So what we'll pay attention to is the fact that if we actually go to the upside, but we curl down into negative territory, that's going to be a lot different than August, right? We noticed that this was able to remain positive. So really the interesting thing for us will be, is this going to be a strong move that takes you across that center line to give you that probability of a higher low? Because this right now is just a potential low on the daily scale. You would need to prove this as a bullish trend by seeing that thing get a strong move to the upside, curling back down and confirming, saying, yes, we have a low, we have a high, we have a higher low, and let's go make a new higher high. So that's going to be key. But really, this can all come down to our weekly ranges. We can take into consideration weekly ranges. We can look for weakness in the shorter time frames, and overall understand, like, hey, if this is close to the center line and this is negative, maybe we didn't go make that divergence, then we need to be paying attention to if that daily MACD rolls over. Anything can happen in the market, right? Nothing's 100%, but what we do is we use the clues to make educated decisions. And right now, we would say that if this happened, then the educated decision would be make sure to pay attention down here. Opening short positions down here aren't the best thing, because that's where we can actually see this taken out, sweep the lows, see that divergence form down here, and then see that buy come in and see some upside. So pretty much in this video, you're paying attention to the risks, right? The risks are, if we start to go up right now and then we curl back down into negative territory, well, we could be going up and then see another big drop. So just pay attention to that. That is how this move would overall fail, is we see that daily continue to the upside. We almost see kind of an A, B, C type of move, but then maybe that C leg is a little bit weaker, and then we actually curl this back down into negative territory. That's really how this thing would set up for another big drop, because big drops still need liquidity. Big drops can go down and down and down for a while, but even during bear markets, you get those ripping rallies that then can turn to the downside, even though this isn't necessarily looking like a bear market rally at this moment. So how can we tell if this will go to an all-time high? Well, I actually think that we could tell if this would go to an all-time high by next week. If next week we start to see some good green bars, maybe we bring up some of our moving averages, right? We bring up these moving averages and we see a close above all of this. Look at all this concentration right now of the moving averages. If you're able to get through that and see a weekly close above those, it is a very, very good chance that you're going to start to see this MACD curl up. You're going to start to see that RSI get above that center line, and you are going to make a move for new all-time highs. A lot can happen in between these weekly bars, right? That's why we look at dailies. That's why we look at 2-hour charts. But for the time being, if this crossed up, that signal line is right on the center. So if this started to see green almost immediately, or maybe after that one flash move down, well, then if this curls up, where is it? It's positive territory. And I would be very, very cautious thinking about, shorting things when they're curling up on the weekly into positive territory, because almost every single time that has happened here around these areas, you have seen a potential new all-time high, or at least a test of the previous all-time high. So pretty much it goes like this, and it's very, very simple. If the weekly chart is able to curl up and you are able to see a close above all of these moving averages as they are in the similar areas right here, that would be a good thing to pay attention to, because that has led to a lot of tests of the highs and going to make a new one. So pay attention. Now, one thing I did want to bring up is we see that these things are crossing down, everyone mentioning death cross and things like that on the daily scale. And more times than not, a death cross actually says you are pretty much like 30 days within a bottom, or if not having a bottom right now. So just be aware of that. You bounce a lot of the time when you do get the death cross. It is something that a lot of people pay attention to, but mainly it is a form of resistance. So we can see those resistances in this area, so we can pay attention on the weekly scale to that block. And that's why it's going to be a very good thing if you're able to get past 576. But if you get to 576, you could end up seeing that as a head and shoulders. We could end up seeing that as, hey, do we just drop down to lower levels? So we'll be watching this stuff with you guys throughout the week this week, making sure to update you guys every single night on YouTube. And Patreon members, be ready, because if we start to see flash moves down, or we see a quick move down or a quick move up, we will be putting out some videos to update you guys personally on Patreon. Now let's talk about volatility, because we were waiting for something here. We were really waiting for something here, which was we got the cross down of the MACD, we got the cross down on the RSI. But overall, we like these things to be in tandem to really digest, like, hey, how probable is this to potentially be a bottom right now? And the truth is, this can potentially be a bottom right now, right? We need to see how the behavior is on Monday. We need to see if things can curl up. But right now, you're just moving sideways. You have not violated anything. The bears are still not fully in control. I would more so lean towards the bulls as soon as they curl up some of these charts on the shorter time frames. We'll get into that on Sunday. But for the time being, this is the first time you have seen a negative bar below your 9-day moving average that is crossing on the MACD and cross down, almost crossing the center line there for the RSI. What does this overall mean? This means that we are most likely going for a test down in these areas, right? We are going to get some kind of reaction to the 50, some kind of reaction to 20, or a test of the 200. Now, what could set up from this? Well, this could be that moment, right? We can use volatility to say, if we're going to see that surge in price action for the SPY to the upside, right? Well, then if this turns down in any way and is still positive when it's able to curl back up, we should be aware that volatility can come back in one more time for a big move. And that is something we'll really pay attention to, because if this is in positive territory, it tells us, hey, we could just be using a test of the 200 and we can go to higher levels. Something we will look for are divergences between the SPY and volatility. Something that would be very interesting is, what if we go to the upside first, right, on the daily, and then we curl down all of a sudden and we get that daily divergence? Well, the VIX can help you out with situations like that. So if, say the SPY is here right now, right? We just came down, the SPY is right here right now, and that's able to extend for a bit of time. The daily is still negative, so you could always come down and make that divergence point. So what would that look like from volatility? Well, that would mean we're going to go a little bit lower for volatility. Then we get some kind of reaction, and what we see is a lower high. If we end up seeing a lower high for volatility while the SPY makes a new low, that is going to be something very good to pay attention to, and I highly encourage you pay attention to volatility if we do see an up or downward move first, because this is going to be very, very interesting how this plays out. I love looking at how bottoms form in super volatile moments, and so this is where being reactionary is very good, because this could play out in multiple ways, but just creating these scenarios, creating these ideas in our head can make us be aware of things to react to soon, right? We're not trying to say, oh, this is going to turn down and therefore I'm buying it at this spot, right? Those are decisions that you can make on an individual basis. based on your risk to reward, based on your trading strategy. What I like to do more of the time is talk about reacting to these type of things, creating these scenarios so that I'm prepared, because this is how stocks like to move a lot of the time, and then making an actual decision once I see things confirm. Maybe something we could utilize is the 10-year yield. As we noticed, the 10-year yield has been going up, and that was not necessarily a good thing. Now, we noticed the divergence on the 10-year. TLT was showing some stuff as well, so we were aware that these rates could go higher. And now you have actually exceeded this point right here and dipped down into that area. So what I wanted to do for this video is see, hey, is this daily going to be able to curl back down? Are we able to get these rates to go lower? Well, weirdly enough, the 4-hour chart here is right by the center line, looking like it may want to curl up one more time. So if we see a big spike in yields, will the market overall not be celebrating that? And will they overall be more worried about this over time? So we'll pay attention to that fact. But if you actually do see an upside move here for something like the 10-year yield, and you see something like this, well, that could be a divergence point that sets up, and we'll be paying attention to any divergences here for the 10-year. And then this could be the moment where the daily actually turns down and people celebrate the fact that they're pricing in maybe lower rates, or maybe we are getting some inclination of lower rates, or maybe we're getting some kind of rate cut being announced for, say, something like May or June. I think that would be very, very interesting. But what would this overall scenario point towards if this were to happen, as we are seeing that 4-hour there? If this 4-hour curls up, what scenario am I really leaning towards? Well, it really depends on the behavior here, but this would more so lean towards that downward movement early on, and then we see if that thing's able to snap back, right? We see if that is able to curl back up. Confirming 4-hour divergence would be fantastic here. So pretty much what I'm saying could happen here is we could see a 4-hour divergence from the 10-year yield, and on the opposite side of that, the SPY could make that 4-hour divergence as well, and then that can be the thing that really turns up the daily chart. Maybe we even get lucky enough to see that divergence on the daily as well. So this scenario is something I think could be interesting with that type of behavior. If the market's able to hold up better, we're still paying attention to anywhere in here for that higher low. So we will be watching that throughout this week. We will get you guys updated weekly ranges. But for the time being, if those yields are going to go up one more push, then we could see the SPY drop down one more time, maybe to go into the breakout area, if not go make that divergence point. So these are just some scenarios to pay attention to for downside. Upside, we'll be paying attention to that more so when we get weekly expected moves, and more so when we're looking at the shorter time frames. But this is just a scenario where you don't want to be overly bullish, overly bearish. You are overall seeing an upside move. You're overall going sideways for the time being since that upside move in some kind of range. So what we want to pay attention to is which direction does it choose early on in the week. So if the 4-hour crosses down, that would not be a good sign, and that would say I'm in negative territory, so I have a good probability to take this out and actually go to lower levels, and that's where weekly expected moves will really help us out. But if we're able to just continue this to the upside, hey, that's fantastic. We need to see this thing get all the way back up to like 576 to feel like things are getting back on the bull side. If we are going to head to lower levels, what stocks would really suffer? Well, it's any of the stocks that aren't revisiting those lows. So let's click through some of these and see what stocks are retesting their breakout area or coming down to those lower levels to possibly make a divergence. So first one we're going to click on is Apple, and that one right away you go, okay, if the SPY is going to head to lower levels, it is very likely Apple is going to be the one that actually has to tear down a little bit here. Maybe some news about China comes out. I don't know, right? We don't know the future. We're just thinking into the future in case we see a bad thing that looks really scary. Hey, what could be the ones really leading the charge on that? Well, that would potentially be Apple. Apple going revisiting this zone down here or going down to lower levels to create that divergence point. That could be very interesting, but that would take you outside of Apple's 95% line in the sand. And we did post the 95% zones for all the stocks that we cover on this channel, and that is most of the stocks on the right side of your screen, right? All the stocks on the right side of your screen, we do give ranges for, and we did give out the 95% monthly expected move because we wanted to show people like there is hard data you can use to make better decisions if it comes down to these areas. And I'm trying to short down here. That's just not a good decision, right? Because this has a 95% chance to just do that by the end of the month. So it's a little bit more of a, hey, do I want to position myself to the downside here? I totally understand if you have some inclination, your strategy is telling you to do something here to catch downside, but doing it down here is exactly the problem that a lot of retail traders run into. They see something bad and then they bet that bad is going to continue right as something good ends up happening, and then they don't believe that it's good, and then they don't believe that it's good, and then it climbs, and then they don't believe that it's good, and then right when they think they're right and you see a drop down, they start to make those bets again, and then boom, it just turns back up. So you have to be very cautious about decision making in these times, but it does suggest that we could go to lower levels first, and then we need to understand that shorting at the lows is not necessarily a good thing, right? Especially if a daily divergence forms, and especially if that daily divergence then confirms, you have to be able to switch your thinking very quickly. And that's why we say, even if you're 100% bullish, even if you're 100% bearish, don't be. Leave yourself that 1% chance. Leave yourself that 1% guy that looks at things like this. When we go down to this level, I might be this guy going, this is interesting. If we go to the upside first and we hit a weekly expected move here, I might be going, this is interesting. We most likely get a pullback or see another drop, right? Being this skeptical guy at key moments can really help you out in making those better decisions. And really, that's all it comes down to, because you can only make decisions about when you buy, when you sell, and how much time you give yourself. And that's the big deal there, right? Do things that you can overall control, right? I can't control which way the stock market wants to go, but if I see a good signal, I can control how I react to those type of things. And reacting in this way is proven to be a bad decision. Getting short positions at a low has proven to be a bad decision over time. So if those are the type of decisions you're making right now, we got to shift around that thinking. Join the live shows. Look at that course. That's 80% off down in the description. You have a long weekend. You could take it, and it's only $200 to learn all the things that we're talking about here, because this is blatantly the strategy that I give you, and we teach you all about these things first. That way it can advance any kind of trading strategy. It really can. Any kind of trading strategy you have, it is very, very useful to understand weekly and monthly expected moves and understand divergences and understand how the MACD overall works. Tesla is another one that would potentially drop down to lower levels. And my goodness, the amount of stops at this level is pretty high. So if Tesla is able to drop down one more time, and then we have to see that thing curl back up, right? We have to see confirmation back to the upside at that point, because that would be curling down the daily MACD. And you have a lot of room here. Even though you created the double bottom divergence, you haven't seen that extended move yet. So maybe we'll go into the shorter time frames again on Sunday. We're going to be breaking down all of the stocks that we do cover on this channel on Sunday. It's going to be a decent sized video, so stick around for it on Sunday, right? It's going to be a long one, but you never know what could be a hint out there. So it is great to watch the whole video, because what if we're using a certain stock as a hint? And that's what we're going to talk about as we click into the next one. But Tesla could see a little drop here. If it curls down on the daily, watch for triple divergence, as you have made divergence on your MACD and RSI. Now let's talk about Amazon. Amazon is very, very interesting, because this you have monthly expected moves for, you have weekly expected moves for, and we'll get you new ones. But Patreon members, you're probably looking at Amazon and going, wow, this might be an opportunity, because you have more information than a lot of other people don't, right? Because you have those monthly expected moves, and we use the options data to calculate it, you can see how high or low the options market is overall expecting this to go with those key percentage points. So that's very good. I want you to look at Amazon right now. The daily scale is turned down. That is not a good thing. That adds to more credibility to going to lower levels. But as of right now, we're retesting in the breakout area. I will put this in the shorter time frame to show you. This is the bar that really broke us out, and we were looking at this wick right here, and we have come into that area right now. That is retesting the breakout area in the previous area where we saw a big upward move. This is a great sign, and if that 2 hour crosses up, that's what we're going to talk about on Sunday, right? So the daily scale here, I just wanted to show Amazon could have a little bit more downside, but most likely it doesn't see as much weakness as something like NVIDIA. NVIDIA has the opportunity to drop down to lower levels if we're going to see possibly a yield spike and we're going to see downside to start off the week. But pay attention if we actually go down to even these levels, maybe hit a weekly expected move and turn back up off it, because that could create a small divergence point for NVIDIA, and we could be using this as a big hint, and that would be a fantastic thing. So NVIDIA might give me a good hint on, is this market, if it drops to the downside, is this market overall tricking people, and do I see that buy come in? Something else I wanted to point out was Meta. Meta is actually already showing potential divergences down here on the daily RSI. It is showing them on the shorter time frame, so we'll go over that on Sunday. But this is key, because Meta's doing what? Well, it's doing the thing. It's making people very, very bearish, and is taking a short position here a great thing? Not necessarily, not in my mind, right? If it's your strategy and you do things differently than me, we think about money differently. I totally understand. It is your decisions. I'm more talking about how I like to look at markets, and I don't like to short things here. If anything, looking up in here at the resistance zone here, that would be more so where I would want to make a decision as far as going short in this area. Now, I think that we have high potential to squeeze at some point, but one thing that's been a problem for Meta hasn't been able to turn up the MACD down here. So we will be aware of that, and Meta is a hint here. Just so you're aware, Meta is a hint here. Because if Meta is going to see deeper and deeper levels, it's going to wipe out a lot of those shorter time frame divergences. But at this point, it's already down there. So Meta is actually suggesting that it could fool around down here. We could make little 30-minute things down here that we'll talk about on Sunday. But Meta is overall like, I can't go much lower without seeing extreme risk, right? It can't go much lower. It can see wicks down here, but it really can't close at these kinds of levels because that's going to be very risky for Meta. So Meta, weirdly enough, is saying, I need to bounce very, very soon, which actually adds more credibility to something over on the SPY, okay? This Meta's hint here is it is going to be very worrisome for Meta to actually close at lower levels. So that means we need to be paying attention to this area where the bulls might be lurking, because we might see this right now as a higher low, but we could see that flash move down first and then curl back up to see that as a higher low. And that's overall what Meta is actually pointing towards with that type of look. It doesn't have to be a hint. It's not curled up or anything like that right now. It's just at key levels that if it lost them, it would be a big problem. And you see how, if it's going to be a big problem, then how is it going to turn down if this is going to end up in the bullish direction? So I will be utilizing Meta as a hint for us throughout the week next week. I wanted to give you guys some meme juice, right? Some of that meme juice. You do have, things like AMC. AMC, people paying attention to it. AMC, we noticed, there's divergence all across this MACD, multiple point divergence on the RSI down here. So we're paying attention to it because this is how big upside moves happen. But what's happening right now, it is curling down. You are getting no confirmation from your RSI, no confirmation from the MACD, but the price action is negative below pretty much all the moving averages, right? So if this wanted to keep going, you would just see that continue and go down to lower levels. But we could see that divergence form, right? This is also another one that says, hey, a divergence forming here would be a good thing. But let's pay attention to GME as well, because that one's still seeing positivity. The daily MACD was able to go positive. So this one is more so leaning towards a higher low. And that could be already forming right here, right? This could be all the pullback you get. And then you could see something crazy. Now, in this area, we did talk about the divergences, so 2-hour pullback was the most likely scenario. We got that for the time being, and the daily MACD is looking very positive with divergence beneath it, So a lot of the time when you have divergence, you head to that upside, you see that go positive, then it curls down on the 2-hour and then confirms back to the upside. A retest into these areas of 25.82, you have already gotten it. So this is very, very interesting to me, and I'm really looking forward to seeing how this plays out. The percentages here would overall say, because you are at a monthly expected move, Patreon members, GME, check it out, monthly expected move, right? But this would overall suggest that we are going to see more of a pullback or some kind of trap outside of that and then pull back into that by the end of the month, just so you're aware for GME. But as of right now, do you have the recipe for success? Well, you have a daily curled up into positive territory. You have a 2-hour that is down in positive territory, which just tells you you're overall pulling back. So more of that would be justified. But we're looking for that 2-hour anytime it curls up. So do you have the 30-minute? The 30-minute is positive in positive territory. We see right away that there could be some kind of double top here. So just be aware if that 30-minute rotates down, and we'll remind you about this on Sunday. Now, there are some very, very good hints of stocks that we do pay attention to, right? JP Morgan. Well, if JP Morgan is giving such a good daily divergence here on the RSI, on the MACD at the same time, then that's really stating like, hey, this can go positive. So if we can work whatever out here and react up to that price point about 254 to 255, that would be a great thing. Even if we get past that and then see a mean drop to get people nice and bearish again, then we turn to the upside. This is a very good look for JP Morgan, right? We see the daily divergence very plainly here. And daily divergence is, if you're going to see some kind of crash or something like that, usually you don't see daily divergence. Usually daily divergence will just confirm a good upside move, and then that upside move could fail. But have we seen that good upside move yet? The answer to this would be no. A lot of those bear market rallies, if you're paying attention to some kind of big bear market rally, which is what you would assume would happen in this type of area, well, then you do normally see that MACD able to still go positive. So we will be watching this very carefully. But JP Morgan is overall hinting and saying, yeah, this can do whatever it wants for now. This can dip down and curl back up. It can do whatever it wants to do. But that divergence, as long as that thing is holding, even if we flash down to lower levels and confirm a triple divergence, this can still end up in the upward direction. And so JP Morgan is something very, very good to pay attention to if you're wanting a different look for it. It's going to be very important. A financial stock, banks need to be good in order for the market to be good. The other thing I wanted to bring up at the end of the video was Bitcoin. Bitcoin actually showing the divergence here, not on the MACD, right? We noticed it was not on the MACD, so we were always thinking like, hey, watch out if it needs to be on the MACD at the same time. And then you end up with triple divergence on the RSI and triple divergence down here between these lows. Well, actually, the MACD just has one divergence. My bad on that one. So divergence on the MACD and triple divergence on the RSI. And it has confirmed, and it's just about to try to go positive, and that's a great, great thing. We want to see good things, but this is overall saying like the momentum is really, really good to the upside. We can always see that flash move down, give us another divergence point, get one more fake out, right? These type of markets, volatile markets, they give tons and tons and tons of fake outs. So what we were paying attention to was the 4-hour pulling back to the center line. Overall, you're just pulling back sideways for Bitcoin, and how this ends up in the upward direction is you see a big, big amount of liquidity being built here, and then you get a strong move, maybe up to about 91.8K. 91.8K has been proven to be a solid support level, right? Support, we kind of use it as a zone, right? Tons of touches of support in here, another touch of support. When we lose it, what do? We use it as resistance twice right away. So if you really want to be back on the bull side for Bitcoin, I think you need to take back 91.8K, because I believe that's an area where you could start to run into maybe a pullback or problems, right? So at the end of the day, taking back 91.8K would be good. But if we're paying attention to what's going on with Bitcoin and we see all the momentum to the sell side kind of dying off, and we see these things actually confirming to the upside, that actually means that big money has moved around. Money decisions have been made, and the momentum is starting to say, hey, we're shifting to the upside. We're able to be positive. We're positive on a 4-hour. And so if this curls up again, we should expect more positivity, which we can read into with the market and say, hey, if there's some good sentiment with Bitcoin, maybe that good sentiment will leak into, say, tech stocks or something like that. So I know it was kind of a different video, but I wanted to really go across some scenarios I'm paying attention to, some reasons for why this could overall end up in the upward direction. And it really points to either way, we end up to the upside by the end of the month. And that's the truth of it, because we've seen the buy come in the 95% area. This is where bad things should really happen, right? Those 1% crash type moments should really happen. And it didn't. We did not see that, right? The more probable thing happened, which means if we do that again, maybe we still want to pay attention to the more probable thing happening, which is that you are going to close back above this line, this dotted line right here, and you have a 68% chance to close back above this, get back into this zone by the close at the end of the month. So we will be watching this stuff with you live. We have plenty of stuff to go over throughout the week, so we will be making YouTube videos all week long. Patreon members, make sure you're aware and have those notifications on for when we're overall distributing those type of videos for when we see something interesting. But other than that, guys, thank you so much for watching this video. I hope you have a fantastic Easter. I really, really do. I hope you end up more so dedicating yourself this weekend to, some people might go to learning. Some people might get that course that's 80% off. But more so, I would like you to spend this time to show some gratitude for your family, what really, truly matters. At the end of the day, this is money. This is bars on a chart, and money is a very important thing. But the most important thing is our family. So show some gratitude, spend time with family, enjoy each other, enjoy yourself if you have no one to hang out with, right? Treat yourself to a good meal. Don't sit and stare at charts all weekend long. Maybe just give yourself a little break and then tune in for Sunday's video, right? Sunday, we will be going over those shorter time frames and getting you guys weekly expected moves. Bless you guys. I hope you guys have all the luck in the world with your family this weekend, not even with trading, right? We know how family things can go sometimes, but really show some appreciation and some gratitude, because that can go a long way. And then we'll show some appreciation and gratitude if we see a good signal next week. All right. Have a great one. Peace out.